Good morning everybody and welcome to Moneycontrol live stream. You're watching the opening bell. Now they've been biding their time patiently and now they appear to be back in the game. Well, in the spotlight we are talking about the bears who appear to have regained control on Dalal Street. In the last couple of trading sessions we have seen a steep fall in benchmark indices. The fall has been far more pronounced in the mid cap segment. Now the immediate trigger for the big sell-off started on Wednesday evening in the US markets after the Fed retained its hawkish stand and said that it would continue to hike interest rates till such time inflation came under control, and now the bulls everywhere are beginning to get worried. Now the point is, can bears hold on to their game at this point in time? They've had a good run in the last couple of trading sessions in mid caps. Now that's where it will be interesting to watch now that stock prices have started coming off sharply. Now what happens in mid cap stocks is typically that often when stock prices start coming off, margin pressures come into play. Here I mean that the amount of funds that traders have to deposit with brokers while initiating the trades, when the price falls they need to put up more margins, and if they are unable to do that, the brokers start unwinding the position. So that is something that we saw in the last couple of trading sessions. Prices fell, most likely many traders were unable to put up additional margins with the brokers, as a result of which stock prices started coming off. Now there is another reason as well, mid caps could be underperforming. Now the earnings of most mid caps by and large were just about okay for the second quarter. So we are not really talking about any major earnings upgrade at this point in time. Besides that, stock prices have been running up quite a bit over the last couple of months. So it's only natural that many players felt that probably they should be taking some money off the table, and that's also another factor that's leading to the profit taking that we are seeing in many of the sectors that's had a good run over the last couple of months. Now there are some other concerns as well. Now one of the major engines of the current upswing was retail money, and we had seen that in the form of increased opening of brokerage accounts, increased opening of demat accounts, and also the mutual fund inflows. Now we are seeing a moderation everywhere. The number of accounts being opened at brokerages, that seems to have come off a little bit. Similarly, we are seeing a similar trend in the case of demat accounts as well. There also we are seeing some kind of moderation. And lastly, mutual funds. Now SIP inflows continue to remain pretty strong. We are seeing over 13,000 crores at last count coming into the mutual fund by way of systematic investment planning. But if you speak to fund managers, they'll tell you that the enthusiasm is a bit on the way now. Now this year, even though benchmark indices have risen very sharply, it's not that investors have made a whole lot of money unless you were in the right stocks, and that is again prompting many to kind of either go slow on their equity investments or take some money off the table. So that is another factor which is in play right now. Now so far the buy on dip strategy has worked well for anyone who's been trying that almost over the last couple of years. In March also, in the aftermath of the Russia-Ukraine war, when you saw a sharp dip, that dip was immediately bought into. Investors bought shares at lower levels and they made good money on that. A similar trend again was repeated in June when indices crashed. You saw the Nifty falling to about 15,200, but from there again the rebound has been pretty sharp. So all those who went for the buy on dip strategy, they have been making good money. So that kind of gives the confidence that if you try it again, probably it will again pay dividends. But again, these are different market conditions. If you look at it, interest rates have been steadily rising. That's a big risk for markets at this point in time. Now a fixed deposit with a good bank, a 2-year fixed deposit now almost gives you 7% plus, and that's no small money, that's no small return, and that's what is prompting many investors to start seriously looking at fixed income as well. So some choppy times ahead most likely for the equity markets in the near term. And well, with that let's get into the market setup. The SGX Nifty futures are indicating a positive open, but that could well get sold into. We had seen a similar trend on Thursday and Friday as well. The opening was just about decent. The market made an attempt to come back. There were a couple of pullbacks during the day, but after that, towards the end of this trading session, you saw selling intensifying and markets closing sharply lower. Now, Wall Street ended lower on Friday yet again for the second consecutive session. Now, recession fears continue to linger, and with the Fed having made its stance very clear, investors are having second thoughts. Now, interestingly, the US dollar has snapped a 2-day winning streak. Now, that seems a little counterintuitive considering that interest rates are set to go climb further and stay that way for a longer period of time according to the Fed's guidance. Now, typically when that happens, the US dollar tends to gain strength. Well, and a quick look at the market open as indicated by the SGX Nifty futures. It's a slightly positive start. The Nifty is up about 10 points in early trade, but it's coming off fast. Nifty IT in the meantime has opened in the negative territory. Advance to decline ratio showing a healthy picture at this point in time. About 1,475 stocks are up and close to about 500 stocks are down. Nifty mid cap is flattish, I would say, at just about 0.2% higher. Nifty Bank is also steady, 0.2% higher. Now, the Sensex has slipped into the negative territory. Nifty is flat, so it looks like bears will once again be out there in full force. Nifty IT in the meantime is down by close to about 1%. This has been a sector that's been under tremendous pressure over the last couple of trading sessions. Remember, if the US does enter a recession, the general fear is that IT companies could see the maximum hit as they are most exposed to that economy. Well, a quick look at some of the FNOQs. Now, we are seeing long build-up in futures of Balrampur Chini and PI Industry. A short covering seen in futures of Colgate Palmolive. There was a lot of negativity around the stock after the analyst meet last week. Most analysts were really not convinced that the management would be able to achieve the targets that it had set for itself. You are seeing short build-up in futures of Emphasis and Dr. Reddy's, and long unwindings are being seen in the futures of Concor, Apollo Tyres and PNB. And moving over to the newsmakers, specialty restaurants. Now, the board will be considering a proposal to raise funds on December 21st. Now, the stock has been one of the underperformers in recent time. It hit a record high of 242 rupees in late September, but since then it has been struggling and has fallen by close to about 18% since then. Nothing great about the second quarter earnings. In fact, the top line has been in a steady range for the last 4 quarters, and that could be one reason why investors are shying away from the stock at this point. The other newsmaker is IGL, which has increased the prices of CNG by close to about 1 rupees pan India. Now, this is the 15th price hike it has taken since October. Gas companies in general are battling with rising input costs, and this is not a trend isolated to Indraprastha Gas alone. And with that, let's move on to the hot brokerage bets of this morning. Jefferies has rated L&T a buy, and Jefferies has a price target of 2,455 rupees for Larsen & Toubro. According to Jefferies, buoyant equity markets are helping with the company's asset monetization plan, and at the same time, it has also highlighted the fact that the management is focused on selling assets at reasonable valuations. And with that, let's quickly move on to the 3 stocks that caught our attention this morning, beginning with Polycab. Now, the stock was among the major losers on Friday. The stock fell by close to about 8%. It's had a good run up immediately after the second quarter numbers. The numbers were better than what market was expecting, but now once again some near-term worries seem to be creeping in. Sher Khan has a buy recommendation on the stock with a target price of 3,215, but it has highlighted some of the near-term concerns, one of them being that realizations in its mainstay wires and cables business could moderate temporarily. Besides that, it's also pointed out the fact that demand has been soft in the fast-moving electric goods segment, mainly because of slightly cautious consumer sentiment, and in addition, because of the early onset of winter and also a change in the Bureau of Energy Efficiency norms, demand for ceiling fans could be hit in the short term. But at the same time, Sher Khan has also highlighted some of the positive aspects for Polycab, the mainly being that the balance sheet is quite healthy, the cash position is quite comfortable, and overall its return ratios have been improving. The next stock on our watch list is Krishna Institute of Medical Sciences. This stock too has taken a beating over the last couple of weeks. Now, Moneycontrol Pro has rated it as a tactical pick. According to Moneycontrol Pro, the operational metrics of the company have been showing a steady improvement. Footfalls have increased during the quarter just gone by, although the average realization per occupied bed, that has been more or less flattish at close to about 29,200. The other triggers for Krishna Institute of Medical Sciences is that there is increased healthcare awareness and also an increase in the number of elective surgeries, and these two factors could help support earnings growth. Besides, the company is also undertaking brownfield expansion in 2 or 3 regions in Andhra Pradesh and Telangana, and these are supposed to get over the next 2 or 3 years. Oncology is one of the major focus area for KIMS. Besides that, Moneycontrol Pro has also highlighted the fact that cash flows for the company remain quite strong at close to about 400 crore annually. Besides, the company has been expanding to the adjacent regions, and it has also a good record of turning around the facilities that it has acquired. Now, it recently acquired 2 hospitals, one is Sunshine and Kingsway. Now, the operating margins for these 2 hospitals at this point in time are 18% and 10%. However, according to Moneycontrol Pro, the operating margin for matured assets is close to around 30%, and so both these hospitals have significant scope for improvement in their operating margins. And valuation, that is the last part, which is also giving some room for comfort. At this point, KIMS is trading at about 15 times enterprise value on estimated, sorry, it is quoting at 15 times estimated enterprise value for FY24, which is at a discount compared to its peers. Last stock on our watch list is KNR Constructions. Now, key arguments in favor of the stock at this point. The company has maintained its revenue guidance of 3,500 crore for FY23 estimated, and also an EBITDA margin of 18 to 19%. According to Yes Securities, the lean balance sheet and also the fact that the pace of execution has picked up significantly over the last quarter or so. Healthy margins and decent working capital cycle are the other positives in favor of KNR Constructions. Now, in its latest report, Motilal Oswal has said that FASTag collections have been showing consistent signs of improvement. They have risen by close to about 8% in November as well, and that is a good thing because it leads to faster monetization of road assets by the road ministry. Now, according to Motilal Oswal, NHAI is likely to step up its pace of awarding road projects. It had set itself a target of 6,500 kilometers for this year, and so far it's managed to do only about 1,500 crores. And Motilal Oswal report says that based on its conversations with most infrastructure players in the road segment, the tendering pipeline appears to be quite strong at this point in time. Well, with that, it's a wrap on this episode of Opening Bell. Trust you enjoyed watching it. Please do send in your feedback, and we'll be back with you at 3 p.m. today.